Hey, good morning, everyone. Glad to see you're trading. Hey, Henley. High flying, death defying 360. Slam dunk. So the day's over. I hope you already know that. Oh, is that right, Peter? Right on. Let's go. Very cool. My man. I was listening to Bloomberg Radio this morning, and they had a guest on. They kept saying their guest was man. They wouldn't have said Mr. Man. Dr. Man, I guess it was. Anyways, it was Dr. Man, Dr. Man, Dr. Man. It was just funny how the mind works. And then Dr. Man takes the mic, and you're like, oh my God, it's a woman. One of my favorite on the Fed is Mr. Because Mr's a lady. I like that too. Oh my God, Mr's a lady. So Dr. Man is a woman. Can you turn up the volume? I guess I could do this, but we haven't started yet. So, and I usually yell. So anyways, it'll be more like that. Volume is nearly max. It's yellow line, not red line. But anyways, I hope you realize like your day should really be ending right now as far as your trading. Easy money's been made. All you had to do is trade when the market opened. I could tell you every week, every Monday, should have did this, should have did that. So we'll see at the top of the hour. Got a couple minutes yet. You're welcome. Sure, Pete. I got about 45 seconds. Hey, Julie. Done and dusted, yeah. Oh, there's so many people that just log in like, what do we do now? You should be taking your profit. Yeah. Yeah, well, it depends on what you're looking at. The M pairs were, many of them were OOP for sure. EuroDollar wasn't, so we'll talk about that. Yeah. So what's your question, Pete? My coffee machine was broken. I hit espresso and it just went bump, 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 bump for like 30 seconds, just pumping. I'm like, dude, it went from espresso to like a full cup of coffee. It was weird. All right, well, I guess Pete didn't ask his question. Took longer than 45 seconds to write it, so it was a big question. All right, I guess we'll have to get going. Good morning. Happy Monday, everybody. Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money cannot afford to lose. Ni hao ma! Hi, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com, but I'm also the de facto leader of this community we call Forex.Today. There are 14,000 Forex traders stationed around the world, and we like to gather this time of the day to align our satellites and synchronize our watches, share ideas, share thoughts, both technical analysis and fundamental analysis. We typically cover the US dollar, the European euro, the Great British pound, the Japanese yen, the Swiss franc, Bitcoin, gold, oil, lots of trading ideas, lots of things to go through technically and fundamentally. So as a valued member of this community, you should click the like button, click the subscribe button, leave comments on recordings, take notes, ask questions, and treat your fellow Forex traders in our chat with dignity and respect. And also thank Traders Way for sponsoring this organization of ours by visiting tradersway.com, opening up a demo account. Okay? Yes, it doesn't cost money, but it isn't free. You have this obligation out of just sort of being part of this community. So you must thank them. Visit tradersway.com. And all they're asking you for is the opportunity to earn your loyalty and respect. Consider it like going to the Ferrari dealership and they say, you know what? Take the keys to anything you want. Do a couple laps around the block. We just want you to feel comfortable here at the Ferrari dealership. And maybe one day when you have money, you'll decide to buy a Ferrari from us. Wow, wouldn't that be cool? At Traders Way, what they're saying is, come here, log in, take a look at the back office. This is going to be important for you managing your successful business. You can download MT4, you can download MT5, you can download C-Trader. You can play some trades. You can see the execution speed is fast. You can see the spreads are narrow. You can see the swaps are big. All these things are awesome. If you need some help, we got world-class customer service. And you're like, dang! Traders Way is like the Ferrari of boutique foreign exchange trading brokerage firms. And then one day when you're ready to trade real money, they would have earned your loyalty and respect, and you'll choose Traders Way to be the broker to your successful Forex trading business. Pretty cool, right? TradersWay.com. That's a good business model, guys. You should support it. Do I need something candlestick blah blah blah? No, dude. No, dude. Get past that. Learn how to trade. Let's learn how the market works. You don't need to memorize candlestick patterns. Yes, you have to have control. Yes, you have to buy at support in an uptrend. Yes, you have to sell at resistance in a downtrend. But you don't need 752 candlestick patterns. That's dumb because you get so focused on trading a pattern than actually thinking. I want you to learn how to think. Okay? There's basically one candlestick pattern in the world that matters. And it presents itself in maybe 3 or 4 or 5 different forms, but they're all the same. It's a lower low and an uptrend. Whether it involves, let's make this fatter so easier to see. Whether it involves a head and shoulders, whether it involves a crown, whether it involves a double top, whether it involves just a V-shaped reversal. It's all the same thing. And above and beyond all of that, you should have already anticipated happening at some level of resistance. That's the one thing you need to notice. In an uptrend, you hit resistance and it makes a lower low. Done. You don't need to buy a book. Everything that matters is the lower low off of resistance. And by the way, you should see that coming a mile away. Okay? There you go. So that book with 500 or 600 or 700 different candlestick patterns is phooey. It's kind of probably really interesting to say, oh, well, that's kind of interesting. But then you're going to get so rules-based that you will never be able to make a decision. You will be thinking about, what did the rules say? In this situation, what am I supposed to do? And you're not making decisions anymore. You're not even thinking. So what is Forex, for example? What is it? Stop thinking about magic rules and what does the crystal ball say? It's businesses, banks, both commercial and central, and I wish there was another B word, but people. Okay? That transfer money across borders. What the hell does that have to do with your three pregnant non-candlestick pattern? Nothing. So if you don't understand this, you won't understand, maybe you don't understand it now, but you will, I'll teach you. But if you don't get that, you don't know anything about your business. So I'm encouraging you not to memorize 30 or 40 candlestick patterns and try to remember the rules. That's stupid. You'll never have control. Okay? You'll never have control. I want to teach you how to understand. That's not right. Veritas? I can't even spell it. Is it Veritas? Veritas. That looks better. Okay, this is what Harvard teaches. Apparently they don't teach me how to spell. Although I had one professor grill me on commas. Okay, what does that mean? Illuminate. Knowledge. Power is knowledge. Right? You're illuminated, you see. That's what illuminate means. You see because you know the truth. Okay? If you're following a bunch of rules off a book on 35 or 45 or 55 or 65 or 85 or 382 different candlestick patterns, you're so focused on these stupid patterns that you don't actually you don't see the truth of how the market works, why the market works, what's happening in the market, what's going to happen. You'll never be enlightened. You'll never become Buddha. You'll be stuck as Siddhartha, crying by the river, wishing you knew the meaning. Well, you need to become enlightened. Okay? And so I'd much rather teach you why a business would move money. Okay? Why would a business move money across a border? Investment? Okay, that makes sense. Taxes? Right? Fiscal year end? Okay, that's what matters. That kind of stuff. That's what matters. Why do people move money? Travel, investment, okay? And if you've invested around the world, out of need. So like, or risk, both on and off. Like need, for example, when there's a devastating earthquake in Japan, money moves back toward Japan and the yen gets strong. Why? Because they need to use it. They can't have their money overseas. They need to rebuild their house. So they're like, huh. So they bring some money home. Maybe not all of it, but if half of every family in Japan brings some money home, okay, to rebuild their homes, boom, it matters. Okay? If India gets shut down from the global economy because of COVID-19, they bring money home because If they're not earning money, then they have to spend their savings, but they don't have their savings in India. They have their savings in America or overseas, somewhere else, right? And all of a sudden they're like, dang, I'm going to be locked in my apartment for 100 days and I can't work and earn money. Well, I guess I'll bring money home. And the rupee gets strong. Okay? Like, that's the kind of stuff you need to, right? But if you're like, what do I do if I have a candle that looks like this and another candle that looks like that, and then another candle looks like that, and then a doji. Oh my God, the doji. Oh my God, the doji. What am I supposed to do? I mean, come on. Get yourself out of the dark. You don't need a $175 book to tell you what to do. Okay? Okay? I just want you to understand. Right on, Julie. Thank you to you, too. Yeah. Well, let's put it this way. If I'm going to, right? If I'm going to invest into you, let's say you're asking me for $100,000. Wayne, give me $100,000. Okay. I'm very interested. What do you do with it? I follow these candlestick patterns in this book, and I look at the book, and it tells me what to do. I'm like, well, why don't I give the book $100,000? Like, if you can't predict the future, then I don't need you. I need you to predict the future. Okay? You get it? Kemi says, I think it benefits. Yes, I'm not poo-pooing on technical analysis. Okay? I think you have to have a sound understanding of fundamentals and a mastery of technical analysis. But a mastery of technical analysis isn't memorizing a bunch of patterns. That's not mastery. And in fact, it's fool's gold. It's a mirage. You're going in the wrong direction. Okay? So anyways, let's start. Now, first of all, we know the most important time, and I do this week after 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 week. The most important time for you to be trading is when the market opens. Okay? You understand that? So, all you needed to know here on EuroDollar is that you were a bull. No candlestick pattern needed, by the way. Okay? And you don't look at this and say, oh, I guess we're bullish today. How many people know I was bullish on EuroDollar, let's say 1 month ago? I'll just pick a random 1 month. How many people knew I was EuroDollar bull 1 month ago? FT9 says, how would you trade if you were in Australia? Upside down. Good. Right? So, all right. So everybody knows I was a bull. Cool. There's your bullish shut up. Done. That's it. You might have had, right? Here's last week's opportunity. Here's this week's opportunity. We're already done. We're already done. You're done. You're done. Take your money, run. It's over. Get over it. It's over. It's gone now. What do we do in New York? Take profit. You're done. Literally, you can walk away right now. I don't know if that's going to be the top, but you can be done. For the entire week. Like, you're done. Maybe it breaks out and goes higher. That's cool. Well, then every once in a while, take a look. But you should be cashing out right now. And you're done. For the whole week. Goodbye. I'll see you on Monday. We had a question about that. What happens if you expect it to open lower and you don't take the shot, why didn't you take the shot, Prince? Prince, if you don't take the shot, drop into a smaller time frame. Okay? But the punishment you're going to face is not being there when you're supposed to. That's the punishment. You miss it, right? No, it's not over. Wait for another opportunity. Drop in a smaller time frame. So you knew on a 4-hour candle, oh my God, you're right there. Okay? Drop into a small time frame. The most important thing is to be there when you're supposed to, because you can't miss it. Okay? Yeah, if you're out of position, then you have to trade it like an OP, but that's right out of the training course. I think you know how to do that already. But the thing is, yeah, you just do it. So here's the thing. You might be looking for detailed, complicated candlestick patterns. Swear to you. You might be looking for all these complicated patterns and stuff like, oh, well, I need it. No, dude, you're at the price. Buy it. Done. Drop a stop. You're over. Like literally 1 minute worth of work, you were done. And you're like, well, what if I lose money here? Yeah, you'd lose a little bit of money buying at support in an uptrend. Probably not going to happen, but if it did, it doesn't matter. Why does it matter? Most of your trades are winners. Okay? So like, let's look at this. Okay? Let's look at this. You're right here when it opened. Buy it. That's it. What about, no, just, you knew last week that you were a buyer. Okay? Anywhere in here, you're golden. Opens right up the central. You're like, awesome. Done. Drop a stop. Walk away. Done. No candlestick pattern needed. No nothing. This is your buy zone. You know it. This is your exit zone. You know that too. Okay? Done. Now what you'll be looking for as a bull is something's going to come back to this area. Okay? Oh man, I keep changing color. There we go. And maybe next week you go for something like that. Yeah, I think you guys are overthinking it all the time. You're just like, you're making it complicated. I try to simplify things for you guys. Like, don't make it complicated. Don't make it complicated. Don't make it complicated. Don't make it complicated. What's the plan for the month? Why would you need a chart pattern? You're already in it. You guys have to understand, you have 2 weeks of planning for this. Why do you make it more complicated than that? So for example, you know the monthly trade plan that we've gone over is for the month. This is our buy zone. Okay? Okay? And now for the week, this is our buy zone. So how long has support held? Like a month? Half a month. 2 weeks we've been at support. Okay? So I'm saying this is exit time because we don't know if it's going to trend up, but we do know we're at resistance. Weekly. By the way, this is the weekly trade plan. You ready? Conservative trade plan, aggressive trade plan. It's not likely to go higher than 13, well, the conservative one is 1332. Sort of the, maybe it goes to 1350, 1360-ish, right? 1361. But right, by and large, the difference here is only like 30 pips, so you can decide what you want to do. But I'm telling you, the trade of the week is now done. Okay? Okay? This is called swing trading. And you know you're a bull. You know this is the exact time you're supposed to be at the chart. I punch it through your brain every week. Every week I punch it through your brain. If you're not there, you're not doing your job, and you're going to miss most of your trades because you don't deserve them. Okay? And you already know your plan. Okay? You were probably buying in here. Now you're buying in here. You know you want to buy at that exact moment, at that exact price, and you're gone. Like, what? More than that, you're overcomplicating it. Okay? And you're probably not following my rules of engagement. You're following someone else's rules of engagement. Okay? What are you worried about? Like, why don't you pull the trigger? You're worried about it doing this? Okay, so what do you lose? 30 pips? 40 pips? 50 pips? You lose 50 pips. Well, if that matters, you're over leveraged. You can't afford to be in these positions anyways. You need to lower your lot size. Okay? One way that I can prove to you that you're a better trader than what your returns show is if I said you just buy this and you put 150 pips stop. Okay? If you're trading with a trend, the vast majority of the time you're going to be right. Whoa, okay. If you are worried, about entering a trade, you don't have conviction on your bias. Okay? Okay? You need to buy because you're a bull. Okay? It hasn't fallen for 2 weeks. Last week it kicked off support. Man, this drawing tool is buzzing me. Okay. Like, dude, right? Okay, well, the last 1, 2, 3, 4, 5, 6, 7, 8 times we were down here and went up. Okay? Are you a bull on any of these? This was last week's bullishness. Okay? This is, right? This step up means we made a higher high and a higher low. Okay? You see this? So let's see, 8 times in a row it bounced its support. Then it made a higher high, then it made a higher low, and the pivots moved up, and the buy zone moved up, and so on and so forth. Now, it's not a lot of money. It's not a lot of pips. It's only 100 pips, guys. It sucks. This is a pathetic trade, but we're in a pathetic market. So right now, all we can expect, now I'm not saying it can't go higher. In these market conditions, I wouldn't expect higher. But if you're a bull, you would love it. But that's not what is probable. So you have to break it down. There's 2 choices. There's this as resistance, and there's this as resistance. Okay? So Peter says, so we're looking for a dip. I think it's over. I think you missed the entire week. Now, that doesn't mean it won't go higher, but it gets complicated if it goes higher because based on what has been happening, and this is the tricky part about technicals, based on what has been happening, the probability of it going up here is low. Now, it certainly can do that because technical analysis isn't what's making the market move. Most, like, remember who I said was involved? I said businesses, banks, and people. Does anyone know a B word for people? That would be a great speech, B, B, and B. Okay? All right, so tell me, who uses technical analysis to make a decision here? Is it businesses moving money over to build a new factory? Is that what they do? They're like, well, bust out a chart. Beeple, bulls, barons. Do banks? Banks are stupid, by the way. Right? Trade like a bank. Banks are stupid, man. Okay. Anyways. And then people. Hey, man. How many people you see at the airport exchanging their money? They're like, let's see. Right? A 300 pip spread. At what price? Give me a chart first. Let me decide. Boom, right? So none of this is going to move based on your technical analysis. So it will go where it wants to go. Your technical analysis is used to decide and confirm, right? Confirm or deny your hypotheses. What has my hypotheses been during this whole period? Well, first of all, I said take profit here and get the hell out. Go on vacation. Oh, I did. Thank you. It was beautiful. The sand was white and it would squeak as you walked across the sand. Beautiful. The water was crystal clear. You're like, oh my God, there's a fish. Oh my God, there's a fish. And it never gets old. Like 6 hours later, oh my God, a fish. Right? Good. That's what I was doing in this period, but I told you to do that, right? And then what? I'm still bull. Up. This is all up. But there would be massive profit taking, consolidation longer than you'd like. But here's the interesting thing. I'm still up. Up. I want this to go up. I think it's going to go up. I'm going to push it up. Up. I'm only looking up. I'm a bull. I'm an upper. I'm up, up, up. So what is my job? Every single day, look for support. Look to buy. How many times in the last 2 weeks, okay, during this consolidation period, how many times in the last 2 weeks have you heard me take the shot, take the shot, take the shot, take the shot? You can't score unless you take the shot. 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 You're a bull. You're at support. It bounced. It made a higher high. You expect a higher low. Take the shot. Take the shot. Take the shot. I didn't say, let's make it complicated. So if you look at the angle between this slope and that slope, and if this is 62 degrees, then this is going to be a dude, you know the price, take the shot. And you even know the time. I said, look, if you're not here when this market opens, you're going to miss it. So if you're not there, you never had a shot. You understand? You're not doing your job. If you're not there, there is no shot. You missed it. You missed your opportunity. Right? You guys, right? Don't make it complicated. You're in a double buy zone, and if you're a bull after a higher high. So this is what I did last, right? Do you guys remember this? Oh man, now it's all fat. Hang on. Let's delete this. Do you remember me doing this? Not on this chart, but on a different one, right? I'm like, higher, high. I'm really trying to coach you to actually draw this. Actually do this for yourself. And of course, I've asked you 100 million times. I even wrote a book that asks you 100 million times. Print out your charts at the end of the week. Go through your trade setups. Okay? Plan ahead. Use your mind's eye. Then you'll recognize it. Like, dude, right? So, okay, higher high. What comes next if you're a bull? Higher low. Great. Inside of a buy zone? Okay, that's reasonable. Inside of a buy zone. That's even more reasonable. Okay? But now, okay? I know we're shooting at rabbits, but it's okay right now. Right? Brinsley says Fibonacci level went up. I won't give you that one, Brinsley. The reason for it, and this is a huge point. Okay, this is important. In this period here, Okay? We're range bound. You would not use Fibonacci. Fibonacci is used for trends. Now, I think what you're doing is you're doing this one, right? I think this is what you're doing. Like, it's sort of okay. It's sort of okay, like, you're looking at the higher high, therefore you're using 618 for the higher low and all that kind of stuff. I think it worked out this way. Oh, higher high of Wednesday, Thursday. Yeah, okay, so yeah, that's what you're saying. I think it worked out that way. Oh, Wednesday, Thursday. Well, that is Wednesday, Thursday. Wednesday. Either way. Okay, let me just finish my thought. I think this worked out that way, but I don't think that's what actually happened. Even though it looks like that, I don't think, right? There's just other things going on. And so the point I'm trying to make, whether this applies to your setup or not, okay, Brinsley, so I'm not picking on you. But my point that I'm trying to make is you would not use fibs in a range. Okay. Now you might be on a smaller time frame trying to predict the breakout, but remember, I don't predict breakouts. I expect this range to last forever. Okay. But when you're at the bottom of the range, you're supposed to buy. Okay, and then after a higher high, you're going to buy at the bottom of the range again and all that kind of stuff. I wouldn't fib it. And you said Wednesday, Thursday, but I don't know what that is. So, but whatever, because this looks like Wednesday and that looks like Thursday. And that Wednesday, Thursday, right? Well, but nonetheless, what I'm trying to get you to be is a bull or a bear. Okay. And you might be overcomplicating it. And this really, it's funny, it goes back to those candlestick patterns. Like, if you're waiting for your three pregnant nun pattern, dude, you totally missed it. And that's not what trading's about. Trading is about, we knew for a fact, I coached you for weeks, that this was going to be the exact day profit taking would happen. And that you should exit the market. And I actually said, go on vacation. It's kind of weird, right? So there'd be some massive profit taking. So this isn't selling, by the way, guys. This is profit taking. This is not bears, it's bulls. This move down is bullish because bulls are the ones exiting. Bears are not selling. Then that's referenced by a whole month of sideways. So clearly bears are not selling. Bulls took their profit and they left the market. And they went on vacation for a couple of weeks. Cool. Okay? Actually, let me erase this. Okay? What is this? What's the significance of this time frame? I know it says support, but above that, there's nothing technical here, by the way. So what is important about that time frame inside that circle? Not technical, by the way. It's not support. I don't care about, well, it is support, but that's not what I'm saying. It's not an issue with the chart. Don't say support. Don't say, oh, the MACD crossed or the stochastics crossed or the 2155 or the 58 or the, or a candlestick pattern or three real bodies. None. You guys are missing it. There's something unbelievably important going on. Okay? It has a lot to do with, let's say, banks and businesses. And when it comes to people, it's people not directly, but indirectly from their money managers, their retirement accounts. Okay? But nonetheless, on behalf of people, money gets moved. Non-farm payrolls, wrong. Rejection, wrong. Low volatility, wrong. Price held, wrong. Uncertainty, wrong. Holiday, wrong. Bullish, engulfing, wrong. Accumulation, wrong. News, wrong. We'll get to it. Don't worry. Keep going. Keep going. End of quarter, rebalancing. Absolutely right. Pa-ching. Absolutely. Ashish got it. Nailed it. 3/4, or right, 3 points, nothing but net. Boom. Q4, man. Or Q3. That's it. Q3. Beep, 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 beep. That's it. Absolutely correct. Okay, some rebalancing. Swish. Okay? And it's just some new activity. Just some new activity, a reason to move money around. Banks move money around, businesses move money around. People have their retirement accounts. So for example, if you don't understand rebalancing, let's talk about rebalancing for a second. Rebalancing. All right. So you have a retirement account. You have a 401k in America. Okay, 401k. Okay, and let's say you have $1 million. Okay, and you're trying to grow it over time to about 3 million, I think is what you need to retire on. Okay, cool. So you have about 1 million. So right, you're halfway through your career. Because remember, you make most of your money at the back end of your career, right? So you're about halfway through, and you got all this saved, and you have a money manager at one of these financial firms, bank, whatever, a month money manager, okay? And they charge you 1% of all your money. And what they do is when you sign up and get a client, you become a client, they spend 2 whole days with you planning out. Well, they have their support staff pump your numbers into a spreadsheet formula, computer simulation. It spits out, you need X amount to send your kids to college, you need X amount to retire, and we have this projected growth rate and this amount of money, and you got to put all this in, and it all makes sense. Basically, they just press a button. And for that, they charge you every year 1% of all the money that you've saved in your entire life. And they spent about 15 minutes thinking about you. And mostly it wasn't even the money manager, but their staff. Very often the ladies. So you talk to the white guy with the gray hair, and then he sends it off to his staff, and they press a button, and they spit it out. And for that, they charge you 1% of all the savings in your life. And what do they do with it? They buy a bunch of mutual funds, which means they don't even manage the money. You're like, what the hell? So you pay some guy 1% of your entire life savings so that he goes out and buys mutual funds? You're like, oh my God. Okay? But part of this is they say, let's do it. Let's say they have a rule that no more than 5% as a risk management, right? So we'll put risk management, risk man. Okay. And by the way, if you think I'm joking, Wall Street is still 50 years behind the world as far as gender equality. It's still 1972 on Wall Street. It's changing, but you'd be surprised how behind it is. So, all right, so no more, so risk management, no more than 5% can be in one stock. Okay? So your money manager loves Apple because they talk about it on CNBC. So they take your money and they put 5% of your money into Apple stock, even though it's like 42 times earning, and it probably is the dumbest thing you could possibly do. But they love Apple. They talk about it on TV a lot. All right, great. So they take 5%. And even though it's dumb, it goes up in value. Despite that, because people that don't know better hire money managers that don't do anything, that don't know any better. And all of a sudden, every money manager on the planet loves FANG stocks because they talk about it on TV. So anyway, so despite all of that, it goes from 41 times earnings to 43 times earnings, and the stock value goes up. Right? What happens? Now 7% of the portfolio is you in Apple. Mostly because the stock market's rallying, but like the top 25 stocks are going up and the other 475 are not going up, right? So if you truly have a balanced portfolio, what happens is your Apple stock increases as a weight in your portfolio. It's gone up more than everything else. And all of a sudden, red flag. You get this red flag pop up on your money manager's screen. And he's like, you own too much Apple. So what happens at the beginning of the quarter? They start selling Apple stock to drive it back down to 5%. But now the extra 2 is cash. And now what should you do with it? Well, you could buy an underperforming asset in the S&P 500 with the idea that a rising tide raises all ships, right? That's really cool because there's probably other sectors that are not making money hand over fist like Apple, but in 5 or 10 years will do quite well in relative per dollar, let's say earnings per share, right? Or multiple of earnings, right? You might be able to buy something else at 18, not 42 times forward earnings. So you start buying that, or you buy Europe. And that's why the dollar weakens and the euro gets strong, because what's happening is investors have made too much in Apple, so they sell some of the Apple. Now they still have as much percentage of money. They still have their 5%, but now they got this free money that they made on Apple, and so you buy the European stock market, or you buy some other stock that's more value-based. You get it? So what happens is, at the beginning of the quarter, you get some new action, right? And then it'll fizzle out. Okay? So that's a lot of truth in sort of a slap in the face style of explanation, but I hope you appreciate it because you're not going to hear any of that in a textbook. Okay? But that's how I roll, man. So in class, we had a venture capitalist come in and speak to our group for about an hour and a half, presented his venture capital fund to our group, and then fielded questions. So it was like a half an hour presentation, an hour of questions. And then it was all done, and because this is all online now because of COVID. So anyway, so then we disconnect the venture capitalist and off they go, and we take our little break. Then we come back and the professor is like, so what do you guys think? And everyone's like, oh, they're so smart, and oh, they have so much money, and oh, I like their ideas, right? And everyone's just loving, they're crushing this guy with love. Oh my God, he's a venture capitalist. He's like a god. Children, right? Children. That's why you got to have a majestic silverback, a mighty, majestic silverback in the group, right? And then, right, and the professor calls on me finally, like right at the end. They're like, Wayne, he's like, I swear to you, right at the end, he's like, Wayne, what do you think? I grab the mic. I'm like, Well, I think it's a really dumb idea. In fact, I don't think they've structured their fund correct at all. I said it's all, if you're in venture capital, you need to hit a home run. You need to go big and you need to have dry powder to do this and that and the other thing. I'm like, they're underfunded. They're structured incorrectly. I think it's really a dumb idea. Even if they did find a home run, a $1 billion idea, they don't have the capital to follow up. They'll get diluted out, and I would never invest with this firm. And like everyone just turned pale. And the professor's like, I totally agree. So you got to get truth. You got to be Illuminati, not from genius or something. You have to cut through the crap. You have to cut through the candlestick pattern and the moving average crossover and the oscillator crossover. Look, I wrote a book about moving average crossovers and oscillator crossovers. They're important, but they don't make decisions for you. Okay? And you got to be brutally honest with yourself about market conditions. Right? I might be anti-COVID-19. You might be pro-COVID-19. But we both have to struggle to ensure what we see is happening. And when it's not happening, you need to stop happening too. Right? Like whatever. So it's tricky. I'm telling you. And I told you to prepare for this lack of volume and volatility. And I said it's going to last longer than you expect. It's going to be a real challenge emotionally. Okay? So you've been prepared, but I also said stay with your fundamental bias, use your technical analysis to confirm it, plan big and expect small. Right? All these things you've heard. So if you're a bull, you still look for bullish trades. That is support no matter how you want to discuss it. Even a bear knows that's support. And then this week, this is the buy zone. Okay? What more do you need? And now here's the thing. Now some traders are expecting this to go way up here. It's going to be a home run. We're on our way to 115. We're going all the way to the monthly R2. I don't have that expectation. It totally could, of course. It totally could. There's a lot of money going into the stock market because there's no other place to put it. I get that. But as a seasoned veteran, I can tell you that your technical expectations need to be tempered. Your technical enthusiasm needs to be tempered. Yes, you still need to enter your trades properly in buy zones if you're a bull or sell zones if you're a bear. Only if the buy zones and sell zones happen to be at levels of support and resistance. And if you have to choose between the weekly and monthly target, choose the weekly. It's okay to shoot at rabbits. You can't walk around looking for moose for 3 weeks and starve to death. And you're like, I should have shot some rabbits, right? So if you look at this and say, well, this has been resistance, and you're up 100, 125 pips, it's okay, man. Rabbit stew is good this time of year. With fresh carrots and onions. How ironic is that? What indicators you use? This is swing trading. That's all that is. So those are pivots. Yeah, isn't it funny though? Like you would put a meritoire, or if you're French, a mirepoix, right? In with your rabbit, which is kind of funny because if you put a rabbit in your garden, he's going to eat the carrots, the celery, and the onions first, right? You're like, oh my God. So let him eat it and then throw him in the pot. It's all pre-chopped. Okay? So I don't know where this is going to go, guys. Nor did I know this was going to go up. Nor did I know this was going to go up. Okay? I don't have answers for you. But simplify things. If you are a bull, you need to know what you want to do, and then you need to do it. Simpler the better. Don't complicate it. I'm not interested in the angles between trend lines like a Gartley pattern or something. I don't need 19 levels. Remember, if you're George Soros, he's also selling the dollar like I've been telling you. But he's not looking at this or this or this or this or this or this. This is overcomplicated for him. So when you wake up in the morning, you know you're a bull. So even if you had no chart, what if all you did was buy dips on this thing? Of course, you stop when it makes a lower low. Well, actually, that's what you're supposed to be doing. We just described it in seconds. Okay? Okay, first of all, you pay attention to support. Cool. So you could just buy at support. Okay? Some of these are better than others, but you could just do that. But also, what's the other thing you're looking for? Higher highs. Okay? So now you're like, I'm going to buy a dip. That's as far as I need you to be. Because if you don't do that, if we do make it complicated, you're not going to do that. Okay? I want you to dumb this down before you complicate it up. We can complicate things down the road, but you're battling human nature, not technical analysis. You didn't pull the trigger because you weren't certain. You didn't pull the trigger because you were afraid. You didn't pull the trigger because there was too much risk. All these things matter. You can lower your risk. Okay? But I need you to I can't have you missing trades. Okay? I need you to simplify. So again, these trades I placed inside the range. What was I trying to teach you? Okay? What was I trying to teach you? I don't put a lot of trades in because most of the time people just follow and it's dumb. Nobody learns anything. Okay? But when I do, I'm trying to make a point. I've made lots and lots and lots and lots and lots of trades with you guys over the years, but it's not my primary form of teaching because I know for a fact people don't learn when I do it. They learn after I do it, but if they do it while I'm doing it, then they don't learn a thing. So what is it that I was trying to teach? Okay? You know we were long hard here. I told you about the big consolidation, or the big profit taking. I told you about the consolidation. And so now, why place a trade in here? What was the learning experience I was trying to give you? Well, I had a bias, and you knew what the bias was. I've had it for a very long time. So you know what my bias was. That's clear. Okay? And then, right, we have a higher high, higher low, monthly, and at the time it was a weekly, but at the time it was also a monthly pivot point. The monthly was about here, I think. All right, so we're kicking off support. Makes a higher high. Do you guys even remember? I actually drew it on the chart for you. Do you remember? Then like I'm expecting a higher low, 6900 psych level. Weekly central pivot, monthly central pivot. And you're like, but Wayne, we're inside, but Wayne, we just get, but, and what was I saying? Well, I have a bias. My bias is just my best guess. Up. But it was up here, it was up here, it was up here. Even during the down period, I was still up. During the sideways period, I'm still up. I'm looking to get long. I'm looking to get long. I'm looking to get long, 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 long. Yeah, sure, I'm front running next month's pivots and stuff, but that sounds more complicated than it really is. I bought a higher low on top of 2 levels of support. The next day, I moved my stop to break even. Is that simple or is that complicated? Okay. Look, you had another chance. Look, you had another chance. Look, you had another chance. Cool. Simple. Okay. These are 4-hour candles, guys. Check this out. You ready? Up, 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 down, down, buy. 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 Now, notice that these are basically days. Okay? So, in the swing trading course, in the day trading course, both of them, they're 2 separate courses, I'm explaining how to do this. Right? These are essentially Asian fades, Asian fades, Asian fades, Asian fades. The difference between day trading and swing trading really is your exit. Okay? But then this could also be your position trading. It's all the same. Right? Because what you want, I don't care about the up. You have to understand that. I don't care about the up. What do I care about? What's the most important thing I care about as a bull? I don't care about the up. Of course it's going up. To me, it would be foolish to think otherwise. Why? I'm a bull. Now, of course, it could go down. I don't expect it to because everything's been filtered. I'm a bull, so I'm a bull. So the market's going to be bullish. So it's going to go up. Of course it's going to go up. Why? My version of fundamental analysis tells me it's going to go up. But of course it doesn't have to. That's what I think. Maybe I threw a dart. Maybe I flipped a coin. Doesn't matter. This is going up forever. But I also use technical analysis to tell me when to stop. Okay? I love the downs. As a bull, I love red candles. Oh my gourd. I love red candles. First of all, it might be me taking profit. And second of all, it will give me a new opportunity to get in because I love red candles because I'm in the business of buying low. And I love buying low. I love it. Too much red candle is good, is bad. Okay, yeah, if we're down here, it's bad, and I will stop. So basic price action tells you, okay, if we're here, this is the general area to buy. If we're here, this is the general area to buy. If we're here, this is the general area to buy. And if we're here, this is the general area to buy. Not the exact, but general. Well, dude, I will do that all day long, all week long, all month long, all year long, raining pips out of the sky. But if someone says, well, too big of a red candle's bad, yeah, you're right. If it does this, yeah, forget it. Out. Give me my money back. Okay? Christian says, what about the second down? Who cares? Irrelevant. Something. Doesn't even matter. I don't even care. You're like, wow, that Wayne, that sounds like you're all technical analysis. He doesn't even care about news. No, I don't care about news because I track the trend in news and I already know the trend. And even if there's one surprise, it's still likely to be revised up or down, whatever, because it's likely to be within trend. Now you get a couple of odd pieces of news, then it becomes a problem for me because I'm not a news trader. I'm a fundamental trader. Fundamental analysis isn't news. I'm not going to dump $1 billion portfolio because consumer confidence was lower than expected by 0.2%. Okay? That's not news. Okay? So my wife and I are actually talking about that this morning. I said, oh my God, Hong Kong really concerns me. I said, there's probably going to be a massive exodus out of money as tanks roll into Hong Kong. And she's like, well, that probably already happened. Everyone knows it's potentially going to happen. I'm like, look, you don't build a $3 billion portfolio over the course of 10 years. And because there's riots in the street, you're going to exit what you built for 10 years and you're making incredible amounts of money. You don't do that on riots. I'm like, did we dump our retirement portfolio because there's riots in Atlanta? Dude, there are riots in Atlanta. It's really rough in Atlanta. Right? There's a lot of change happening. And for good or for bad is irrelevant in the sense of, do I dump my 401k because there's riots in Atlanta? Then why would a multi-billion dollar hedge fund dump their portfolio because there's riots in Hong Kong? But what if there's tanks rolling in? Right? Okay. Now we got a problem. Okay? So there's a difference between news and fundamentals, and it has to do with what will make money cross a border. Sometimes it's nice investments because the economic conditions are good. Sometimes it's fear because economic conditions are bad and people are pulling their money home, where central banks are issuing certain policies, putting them into effect, which changes the direction of flow of money. All that's very important. But rumors and conjectures and small changes in news. Oh my God, did you see PPI was 0.3% more than expected? Yeah, don't really care. Don't really care. I'm a fundamental trader, not a news trader. Okay? There's a difference, right? Is that right, Michael? That's why I don't leave the house. That's why I don't leave the house. I live in paradise. I don't need to, I don't know what's going on outside of my yard. I rarely leave my yard. Rarely leave my property. I'm even trying to think of it. When was the last time I've left my property? Besides the grocery store. I guess when I went to New York in March. Yeah, I left my house in March. I think that can't be right, is it? Yeah, March. I haven't been in Atlanta since probably a year now. Amazing. Yeah. Oh, you're right. Yeah. Vacation last month. Yeah, that's such a strange thing. Yeah, that's right. That's such a strange thing. I don't typically do things like that, but my kids are of age where you're like, oh man, you got to take these guys to the beach. Come on. Yeah, that's right. Yeah, you're right. That was good. Uh, I took all the beautiful back roads. It was nice. It's gorgeous. Yeah, nice. Where was I last Thursday and Friday? You missed me. Well, Thursday I did non-farm payrolls live at FX Street for the 171st month in a row, and Friday is a holiday. So if you were trading during illiquidity, you made a big mistake. I would have yelled at you if I was your boss. Okay? I got big plans for you guys. I got really big plans for you guys. I've spent several hours over the weekend thinking about you and where we're going to go. Okay? Yeah, I don't trade during holidays, guys. That's a death sentence for your money. So let's say we did Kiwi. Did we do CAD yet? Okay. This is what I'm trying to get to. Okay. So this is a trickier one, right? Because this is OOP, out of position. It's so bullish that bulls didn't get new entries. So what we're going to watch here is an early up and then profit taking. Yeah, you guys are funny. What are you doing trading? Wow. Yeah, when the markets are closed and stuff, you got to be very careful. Seriously, if you missed the fact that the United States of America was shut down for trading and you were trading a market without the world's largest economy, that's a real slap. Like, you didn't know the United States shut down. Like, don't be ashamed. But you need to get tuned into the market. Right? You were not talking with the market. You were not part of the market. If everyone else took the weekend off or the day off and you were there, I mean, why was non-farm payrolls on Thursday, right? Like, seriously, if you missed that, it's a red flag. Like, you were not a market participant. You were a market observer. You're on the outside if you don't know basic facts like that, right? So don't be ashamed. Like, I'm not embarrassing you. Okay? But I am telling you that you were an observer of the market. You were not a market participant. You didn't know. You're not, yeah, you don't know the calendar, you don't know the news, you don't understand what people are talking about or concerned about or something. You were not on the clue train, and you need to make some adjustments if you didn't know that. Okay? So don't be ashamed, make a change. How the hell did you not know that? Okay? Okay? You got to know that, right? You got to know that. You have to know that. Cool. So anyways, last week, okay, we were in a similar situation that I described on the other currency pair at support. But here's the thing. The market opened on the exact pivot you want to buy. That's too aggressive for me. But I certainly love the fact that we got a higher high off of the perfect entry. So I bought the higher low. Cool. Which also happened to be the central pivot point. 78.62. Like exactly. So we get a bounce on M2. It creates a higher high. I buy the dip at the central pivot point. How many people consider that a simple trade? Thank you, Daniel. That's exactly right. There's no guesswork, correct? I mean, there's no guesswork. If you're guessing on Forex, you're not doing the right work. You might be doing a lot of work, but you might be like the person that goes to the driving range every day and hits 100 slices. And you're like, how come I'm not getting better? I go to the driving range every day. I hit 100 balls every day. I have blisters all over my hands because I'm trying so hard. And then after hitting a bucket of balls, I do a whole round. So Wayne, I'm spending 5 hours a day, every single day, trying to become a better golfer. How come I'm not a better golfer? Because you spend 5 hours a day perfecting your slice. You're not doing it right. You're doing lots of stuff. You're just not becoming a better golfer. Okay? So I'm trying to show you sort of the other side here. This is obvious if you're a bull. Now I look at it as too aggressive for me because in the summer I don't expect it. But if you miss that in the fall, you don't got it, man. You don't have the shot in your bag. That's another golf analogy, by the way. You don't have that club. You don't have that club in your bag. If you miss this in the fall, then forget it. You're right? You're better off watching golf on TV. In this case, I recognize the opportunity, but I pass on it. I have the shot in my bag. I recognize it. But I'm like, not in the summer. Because I expect, after massive profit taking, consolidation. Okay? But I'm like, that is very interesting. OMG, did you see the bounce off that M2? Holy smokes. Holy smokes. Oh, wow. Was that an amazing bounce right off M2? Then you're like, oh, holy wowzers. Look at the higher high. Now, here's the funny thing. I actually did this one with you guys. And I'm like, higher high, what do you expect next? Right? Right? We did all of this. And the thing is, then when the webinar was over, I took it. Okay? So I'm like, oh, I'll take this every day. Oh my God. After that M2 bounce, all day, every day. 60% of the time, it works every time. Okay? Or you could say, I'll take that every time. I'll take it every time. Every time I put that together, I'll take it every time. As long as it's not a bearish market. Sideways is not bearish. And every time I take it, at least 60% of the time I make money. Money time. But remember, my losses are small, so 40% of the time I'll have a small loss, and my winners are big. So I'm going to take it every time, and at the end of the year, I'm going to be rich. Filthy, stinking rich, like a pig in slop. Or at least richer than last year, right? So that's it. Okay? Now, price action takes effect. nah, 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 nah. Okay? And now we're doing OOP. So now this has to continue up. We don't know if it will, but that's what you're thinking about. So let's do this. No, 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 no. And as long as that is correct, then we're going to hope for la, 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 la. And if it makes a higher high, I will feel so good. I'll move my stop a little bit, okay? Because I can't move my stop till I get a higher high. Okay, cool. So if it makes a higher high, great. Okay. So I'm watching this now like a hawk. Okay. And if it goes higher, great. Nice. If it doesn't, well, maybe I make a decision like do nothing. Okay. I'm only up like 80 pips. It's hardly anything. Men in Action says, that's a good point. Yeah, it's just price action. That's very basic price action. Right? You certainly don't move your stop because you're up 50 pips. Who cares about 50 pips? Okay? You move because market conditions have changed. Yeah, but look, you're going to train yourself to take pissy little winners. Nobody cares about pissy little winners. And after a while, you're like, I have all these pissy little winners, but I'm not getting rich, so I guess I'll jack up my lot size. And now you're poor. You go from moderately okay to suddenly poor. Why? You increased your lot size. So if you know death, financial death, if you know financial suicide is increasing your lot size too quickly, then how do you make more money? How do you make more money if you know you cannot increase your lot size too quickly? What's your other choice? There's only one other choice. If you can't change your lot size, what can you change so you make more money? By the way, I'm preparing you. I hope you understand. I'm preparing you to talk to your future clients. Manage your risk, whatever. No. Make more pips. Thank you, Daniel. Okay? Your setups have to be better, and you have to let your winners run. It's all about letting your winners run. Scalping, fail. Why? It's a pissy little winner. Okay, you can do it because you're bored. Okay, you can do it to fill some time. Okay, blah, 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 wah, wah, wah. Scalp, yeah, and by the way, if you were a scalper when I started 20 years ago, holy crap, that was awesome. You know what I mean? Like, holy smokes, was that good. Why? The market was very inefficient. The market's extremely efficient now. So there's lots of get-rich-quick scam artists that are selling you pipe dreams. And by pipe, I mean crack cocaine dreams. Okay? And so they'll say, that's the easy money. That's how you get rich quick. Well, if that's what you need, Forex is not for you. This is a business, son. Grow up. Okay? So the way to make more money without jacking up lot size is more pips. As Daniel said, more pips. Well, Wayne, if I have to make trades that produce a lot of pips, I will have to know where it's going and why before it happens. Yeah, that's about right. Yep. About right. Okay. So like rock and roll. You want to start a rock and roll band so you can get rich, right? Sex, drugs, and rock and roll, touring the world. Woo! You want to be a rock star. So the biggest rock bands in the world are still Metallica and Guns N' Roses. I saw them in the 1992. I've seen Guns N' Roses probably 3 times. I've probably seen Metallica 3 times. You notice how good Slash is on the guitar? You notice the Metallica songs sound good on classical instruments? Because they're very good. Better than everybody else. You can't just start a rock and roll band, throw some guys together, guitar, bass, drums, get out there the front man, boom, you got yourself a rock band. There are millions and millions of failed. Even the ones where you used to like their hit songs, you're like, oh my God, I like those 2 or 3 songs from that band. I remember that video. And then what? Yeah, they might still be doing, summer concerts for, 80-year-olds. But whatever, right? Yeah, see, I don't know if I could go to a Linkin Park concert anymore. That was a bummer. But anyways, right? It's like these dreams of like, let's just throw some guys together and create a rock band, tour the world, sex, drugs, and rock and roll, trashing hotels and stuff. Metallica, they drink herbal tea and get massages before and after the concert because they're old men. Lars said one time, and I was listening, he's the drummer, I listened to an interview he did, and he made an offhanded comment that he hasn't had a beer at a concert since like 86. I'm like, 1986? Really? Like, I thought these guys are all sex, drugs, and rock and roll. No, they're businessmen. They do 5 concerts a week still. They're making like $500,000 a week each or something crazy like that. But they hustle and like crazy. And in between all their concerts, they're doing radio appearances, they're doing TV appearances, they're doing corporate appearances, they're doing record promotions, they're doing documentaries and commercials and then flying around, hustle, 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 hustle. They're hard working businessmen. And they happen to be better than everybody else. So all of that to me is hard work. Okay? All of that to me is hard work. I want you to be the hardest working person. Not because you put in a lot of time, because you have more patience, more discipline, and more foresight. Okay? I want you to be thinking between now and the end of the year, not about what's going to happen in the next 4 hours. I want you to predict the future accurately every single day. Okay? If I didn't know this was going up, I wouldn't have bought this trade. I want you to think about that. If I didn't know this was going up, I wouldn't have bought it. So how did I know? How do I know in my mind factually? How do I make a decision like that? I'll even change the question a little bit. How did I know that I would look for a trade like that 9 weeks ago? I'm just randomly picking a time frame. How did I know I'd be looking for that trade 9 weeks ago? Okay? I didn't know what price, and I didn't know what time. Now I got to erase this because it's on my time. Okay? I didn't know what day, and I didn't know what price, but I knew what I wanted to do. Okay? Okay? All of this means not down, not down, not down, not down, not down. Think of it as weekly candles. Big red candle, followed by little red candle maybe, followed by little red candle, but definitely something's going on there. Okay? And you also have to remember, before all of this consolidation, we had a giant up. So I just might be thinking giant up in the future. I don't know. Okay? So anyways, these are the two prices that week that I could choose to buy. I know how to trade, and I know what I want to do. So I know this particular week I have this and I have this. So the second opportunity here, every time. How about the week before? This is the exact price to buy. Did it work out? You didn't lose any money. Okay. The week before that, this was the exact price. Did it work out? No, but you didn't lose any money. Okay. What about next week? Now, I don't really want that to happen. I want this to go up, and I want these to move, so on and so forth, which means we'd probably have a big high and a bigger low, and this moves up to there, and so on and so forth. So I'm not making the decision on a Monday where I'm going to buy next week, but I need this to follow this. I need this to stay up. If it doesn't stay up, I might get out. That's it. So I don't know what the market's going to do, but I do think about macroeconomics, not news. I'm thinking about what the world wants to do with its money. That's my prime concern. What does the world want to do with its money? It's either risk or reward. Now, I'm not talking about in the next 4 hours. I'm not talking about in the next 4 days. Maybe the next 4 weeks, but I might be more concerned about the next 4 months. And over the next 4 to 6 to 8 to 12 months, I make a decision. I say, well, I think it's more up than down, or I think it's more down than up. Okay? And from that, it filters out every decision I make for the next 4 to 6 to 8 to 12 months. So if I think macro is good, so they're thinking risk on. Am I saying there's no risk off time frames? There will be risk off times, for sure. Okay, can't argue with Buddha. Buddha says everyone has their time. Well, everything has its time. So the market will be bearish over the course of the next 4 to 6 to 8 to 12 months. So I should not be a market participant in those market conditions because I think more up than down. But there will be down. I just won't participate. Okay? So now I go through these periods of, do I buy this? Yeah. Do I expect anything from it? No, actually I don't. I told you. And this, do I buy this? Yeah. Do I expect something from it? No. Do I buy this? Yeah. Now I bought it up here, right? But it doesn't matter. It's the same idea. Do I expect anything from it? No, I don't. I don't expect. Okay? I don't expect. This is sort of the idea of, plan big, but trade small, expect small. Okay? Should have got out of there maybe. Would have been great. Okay? Cool. But do I know it's going to go up? I have no idea if it's going to go up. You getting the idea? I have no idea. Now, I think it'll go up. I want it to go up. I have no idea. None if this is going to go higher. But I do know where I want to buy, and I do know I'm a buyer. So I know I'm looking for prices, right? I'm looking for prices, and when we get there, that probably will be the right time. So buy this, yes. Buy this, yes. Buy this, yes. And in the future, maybe if it comes down, buy this, yes. I won't like it, but I might do it over and over and over again. And when the market favors my point of view, I will make money. I gotta go. I got like 9 business meetings today, and I got 9 hours of homework. Crazy. But yeah. You see what I mean? Like, all right. So let me summarize it this way. You're making it too complicated. I don't know why. There's a price and a time to do what you want to do. Most of the time you know the price, and most of the time you know the time. Okay? I will repeat. Okay? Those are the exact moments in time I told you you need to be at your chart to do what you need to do. And I think even in non-farm payrolls, I said, if you're not at your charts at that time, you're not doing your job, you're not a professional, you're not going to get opportunities. That's that. Pretty blunt. Okay? Okay? This is when the market opened on this one, and it's out of position because it's so unbelievably bullish it didn't even come back. Oh, good thing I'm long on that. That's good for me. I was in it before it was unbelievably bullish. Cool. But like if we go to the EuroDollar, I think we were on that earlier. Okay. These are daily pivots, but let me show you the market open. You're like, what? 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 Let's do it this way. Swing trading, bullish bias. You ready? So you woke up, or this is Sunday afternoon, and you're right here. This is your buy zone, printed in pretty green colors. And let me actually show you this, and then we'll leave it at that, because this is going to be so powerful. Let me update this. Indicators, bias pivots. This is my custom indicator. I want to know the conservative target for this week. We already know the buy zone was perfect entry. Check it out. Okay. And do you remember, here's the profit target. Do you remember at the beginning of this webinar, today, we were right here, and what did I write? Exit. You are done for the week. You made your money. Done. Walk away. Look what's happened. Look what's happened. So now I have to decide, well, maybe I'll buy it down here. But whoever bought it up here because it was green, you got slaughtered because you're a pig. The more you realize it, the more you're going to do something about it. You're either a bull or a bear or a pig. And pigs get slaughtered. Thank you for being part of the Forex.Today YouTube community. Please like, please comment, please thumbs up. Thank you for being a client of Traders Way. But if you're not, visit tradersway.com, open up a demo account today. These webinars are not free. They come with an obligation. You visit tradersway.com and open up a demo account. Peace on earth. May the pips be with you. May your profits be above